and the best bank loans for business alternatives up to 10 million, 20 million, 50 million and beyond without collateral, even no hard credit checks, bad credit is acceptable, and even lower documentation are. Hi, this is Michael with Viral Funding Solutions. I'm a business loan broker expert who's been doing this for quite a long time, helping business owners and businesses thrive, survive and thrive and scale, go up higher, and making sure they go underneath the right umbrella, strategic partnership, and roadmap for longer term success. I have vetted the best underwriters and lenders and team out there that I can help you with, so you're not having to drag feet wondering if this other person will really help you. They overpromise and underdeliver. Overwhelm you is an understatement. Are they trustworthy? Are they reliable? Are they the right source? Will I get maximum funding, terms, rates, flexibility, early payment discounts? There's so much more you want to mitigate and get away from, because these people are trying to push something down and trying to bait and switch you. So the focus of this and the premise of it is on alternatives to bank loans. But before I get into any of those services, and that's why you'll want to stick with me until the very end, so we go to each and every one of these and kind of more or less go over what they entail and why they are best. But let's speak about why not go to a bank right now. Whether you have a solid or not enough of a good relationship with them, personal and or in business, even if you're just getting started and you're like, well, I can't get a term loan, I'm just getting started, I'm looking for a line of credit, they're possibly not accepting me, or you are a non-startup having trouble. See, the banks right now, when you're watching this video as well as in the future, it's become more difficult. The prime rates have increased. So you're seeing at about 7.75% right now, plus an additional amount. So the banks could be lending somewhere between 8 to 12%, 8 to 13% more or less. And that number can go up over time if the prime rates then go up again, or if they go backwards a little bit down. So you're seeing a similar basis when you go to a non-banking lender. You're going through a provider, an investor, a private lender, not an actual banking institution who's lending you that. And there are a lot of advantages, but it's also mundane. The credit policies, you're going through a credit committee, whatever, depending on what kind of loan you are getting. And it can take longer. It could be more vigorous. You're not getting what you wanted, the approval amounts. They don't understand your situation. I've been there before with the bank. They don't necessarily always understand your projects or your project and the needs you have. You might have a multiple of things where they go, okay, that one makes more sense, but it's just too complicated for us to put our head around. And so they won't always understand your situation and won't want to lend you as much. And the qualifications are becoming much higher. They want to see businesses cash flowing heavier, way heavier, because their debt, with the rates increasing, their debt usage and amount is going up, and they want to limit that. They want to restrict that. So by doing that, they're putting these constraints and they're tightening up, and they're making sure they're only lending to businesses and business owners who are generating like 4 to 6 million, if not more than that, in annual gross revenue, and making sure it's a clean credit profile. Every little part of it has to be pristine, clean, and making sure it looks good. Their technology may not be the most up to date. They lack the underwriting parts because it takes longer, and it can be somewhat up and down. And right now what we're seeing is that underwriters, they're becoming more short-staffed. And a lot of people are retiring because of what happened with COVID. They realized things, it was their time. And then post-COVID, you're seeing a big turnaround. People are being let go even. You have a lot of things that they don't even communicate well enough sometimes in each department. And it's harder for business owners to liquidate, whether you have one bank or multiple. And these are just some of the many problems. There are many more that I know about because I've been through some of these myself, as well as I know business owners who are currently and have gone through it because I've worked with them, whether they've received funding or not. I know these challenges that are out there. So let's focus now on the alternative, which are these services outside of bank loans. And whether you have a good relationship with that bank or not, there are these other options that you should be exploring. Opening up another account if it's an SBA loan, there's more flexibility, better amounts, what you're getting there, the relationship. You want to start off fresh. You want to get something better, a preferred lender here that actually understands your niche. So one of those is being the SBA loan. That's the 7A and 504 is what I want to focus on. Perhaps you've heard of EIDL. That's not the premise of this. And I'll leave more content down below on EIDL, but that is currently not available, so I wouldn't go seeking for an application. Maybe by the time you're watching this, it's opened up somehow, again, to new applicants and ongoing applicants for an increase and more of that consideration. But aside from EIDL, you have the 7A, which is a very popular program. Perhaps you've heard about it. You probably received one. You're looking to get one. And I help out a lot of business owners get these. In fact, I have plenty of my preferred lenders with different banks and non-banking lenders, private sectors. And I know where, when I look at you and your business and what your current needs are, what you're trying to do, I know which lender is best for your situation. Unlike a bank who might work with just too many, be a jack of all trades, master of none. And so what they're looking in your file at, it's not as concrete. And it takes longer. You have the credit committee, credit, they monitor that part. And sometimes you have somebody who's more old school looking at it and saying, well, I would require more. I don't feel comfortable looking at it. I'm going to give them a higher rate, or I'm not going to give them as much. And we want to ask for more collateral. If collateral is asked for, it's not the primary. They look at cash flow more than anything, equitable collateral, liquidity, down payments, etc. But what you have to think about is what's in the best interest for you. It's an SBA loan, and we'll go on for a couple more minutes and we'll close up shop. And by the way, down below in the description, there will be more information. You can fill out the questionnaire form I'll leave for you down below. So look in the description after this video is done, and then you'll open it up. You can select from one of the two options if that starting page is there, and then it will bring you to my questionnaire form. Fill it out. It can literally take you less than a minute, 30 seconds. You can be as accurate. You can give some estimates, but get close enough to it. I'm not asking for you to pull up your bank statements or tax returns and start filling some information, and that's not what this is. It's me pre-underwriting a file. I know what these underwriters, these lenders want, so I'm able to pre-underwrite a file. And what I do is I look at it. It's not an application. Before we go into an app, this is what I'm looking at, and then I'll suggest to you what's the best lenders, providers, organizations, what I recommend is best, and I'll respond back via email with your best funding option and options. A very highly personalized and customized email response on all of that, whether you can or can't qualify, and what is best for you. I'll show you towards the top, and you'll learn more about it when you go through that questionnaire form. So I'll leave that down below. That's what you should fill out if you haven't. And if you have, I will get back to you. I do get sometimes flooded, which is great because you want somebody who knows their stuff. You want to go to the best and get the best. You want somebody who's in this every single day, who understands the markets, the lenders and underwriters, what they want. But what you have to think about outside of the banks with the SBA 7A loan, going to your own bank, if it makes sense, it makes sense, but there may be another SBA banking lender here that actually understands you and your industry. They may not be as credit intensive. They may not be as strict on that underwriting guidelines. It can be much faster, much smoother, actually, in a lot of cases like that, and get you in and out the door a little bit faster than going somewhere else. So you got to think about those options. Getting up to 5 million there is one of them. There's a cap line program. Of course, there are bank term loans, lines of credit, business credit cards, etc. Excuse me. So you have the SBA 7A loan. That's one. You have the 504 loan. That's another one. You have the business lines of credit you can get as well with online banks. You have private lenders that are able to fulfill on that as well. You have the bank ones, as of course. So you can add a position from a bank loan sometimes to a private lender and add another one. Or if you have one private lender with the line of credit here, we can look at another position if it makes sense to get you it. If it doesn't, it doesn't. You have the equipment financing, leasing to own, sales lease back. Each one of those are different components and what they would require. So I'm not going to go into them too much right now, but I've left content. I'll try to link it to you down below, but in the questionnaire, you'll want to fill that out, and then I'll give you more details on each one of these services. You have personal/startup loans if you are a complete startup, pre-revenue, but you have at least $50,000 in annual revenue verifiable by a personal tax return or pay stubs, etc. One way to verify it and be able to see, hey, yes, we can try to get you between this range based on your debt to income ratio, your history of credit, and more that we'll look at. You have revenue-based financing, where we're looking a lot of the time at just the revenue going into your business bank statements primarily. Yes, people have used personal statements, but it's only very seldom. One or so lenders work with that, and I have them. But your approvals are going to be a lot less, 20 to 25% of your monthly revenue, in a lot of cases your lowest month. But revenue-based, we look at the bank statements. We don't necessarily have to ask for a tax return or more financials, because if you're looking for funding north of 150,000, usually like 151,000 and above, sometimes 100K, depending on what positions you have. We may ask for a recent tax return and what lender we are working with. But anything underneath that, in a lot of cases, 150 and below, we don't always ask for a recent tax return and profit and loss, year-to-date profit and loss and balance sheets, ARAP report, etc. So that's revenue-based financing. You have the term loans, you have the hybrid advances. You probably have heard of merchant cash advances. Hybrid advances are kind of an alternative mixed with the term loan intermix, I like to call them, between 3 to 24 months. And in this market, if you're looking for an alternative to the bank, which is what a lot of people come to me for, and like I said, a lot of the times the communication with the bank isn't there. They don't understand the technology, the underwriting. It takes forever, or some things just didn't want to happen. You didn't want it to happen that way. And the liquidation, where you couldn't liquidate what you couldn't get out, what you could have put in, but it didn't get put in. There's so many things. It's not to say you don't have a good enough banking relationship, but it's just not the direction you want to go into. And if you don't have a good banking relationship with them, especially if you don't keep enough in their accounts or what you're trying to do, you have multiple banks, however you see it. And once I see the scenario, come to me with the questionnaire form and a few more things if need be, then I'll better understand your situation for sure. And so what you're looking for outside of a bank loan are various factors: speed, quality, sincerity, trust, reliability. And I think all of these things I instill myself, with my team included, with what I and my team can do. And they are very professional as well. We all go to work and we help you understand how to get the best funding option for you so it doesn't hurt you. I'm not going to lead you down the wrong path. But there are variable solutions, and if one doesn't work because there's something upheld in this that we can't get you a certain service, then we do a reroute and we look at different angles. And that's what we are all doing on our back end. You know, being able to handle the documents, being able to review them, a lot of the times what I can do as a broker, and then how my team and I can do that as well. And then where we go find the best lender or lenders and we say, hey, this is the best one. That one we wanted, but we really wanted this one, and we're not hurting and impacting your credit at all like some others who just send it out. You get soft pull after soft pulls, they're pulling, you got a hard pull, you're like, what's happening? We don't do that. There's direct lenders and indirect lenders, and I have direct lender partnerships, but in an indirect way where we look at it in like an in-house brokerage setup where you get a lot more flexibility, and that's the direction you want to go into in this market. And you just don't want to apply anywhere and everywhere. I'll stop you right there. And if you have, you pretty much know what that comes about. And be careful, because there are people out there to get you. You're going to be bombarded. You don't know what to do. You're like, oh, I should have listened to this person, Michael, who was telling me what was best for me, for you, as I mean that. Not for me. I'm doing what's in the best interest for you. But there's a lot of things that I want here, and I'm going to end the video here, just underneath 15 minutes, is just be considerate. So be open-minded, allow for feedback, and allow for patience. And, you know, when we have all these things going on, let's reduce the friction, let's reduce resistance. We don't have to both zap our energy and time. I'll take care of you. And you'll see when you fill out the questionnaire what I mean by a lot of this and why I do it the way that I do, my processes, my systems, my automation. And I run multiple businesses, if I haven't said that. So I get it when it comes down to getting business funding, getting loans, government funding, business, personal credit cards, the list goes on and on. Navigating that world for my multiple businesses, my digital marketing agency, affiliate marketing businesses. I had a few other ventures, and this is my primary one right now as a business loan broker, and that's what I focus on. And I know it very well. And so if you want to get it from the best, you don't want to just try to keep doing a bank loan and you're like, I'm not getting what I want. I'm projecting a revenue of about 600,000. I just need about 400,000 right now, all at once. Can you qualify for 400,000 at once? That's another question. But where do we need to move you? And I'll place you with the right lender for sure. I've helped out just about every single industry and business owner. And I hear all the problems as an entrepreneur slash business owner, not just a business owner, because I have other businesses as well. I'm always asking myself, what questions would I have? What questions would the business owner have in your position, in your business, that I can answer? And no matter how challenging of a question is, I'm always looking for a way to primarily and then secondary constraint answer those to the best of my ability. And I usually know the answer to these. And if something were to change in the market, sometimes I just check in with my lender or my underwriter, and just to make sure, I'm like, okay, I was correct on that. Oh, there was a little bit of a change. So I'm going to work on my back end and getting more for you, getting more done. And yeah, just be careful. Bank loans aren't always as attractive as they used to be. There's more of a hold on it and making sure they get the right client for them. Otherwise, they won't lend to you, and it's going to be much difficult. Now, business credit cards and some of those are still achievable, but be careful. Even lines of credit are becoming more conservative in what they lend to where it was years ago. And making sure you have a credit profile that's even greater than just 300, 200,000, 100,000 in annual gross revenue, like 4 to 500,000. And then the credit's got to look crisp, clean, and how to get a type of repayment you want, a structure. And so there's a lot of things also on this side outside of an online or an offline bank that we're looking at to mitigate risk and making sure that the lender gets what they need, because they're assuming a lot of the risk if there is no collateral in place. There's collateralized options, there's non-collateralized options, but be careful about who you hear this information from, and they try to sway you in a way that doesn't make sense. Again, I'm believed to be, I'm a very humble person, respectful, and I've helped out a lot of businesses to this day get the right type of financing. So I can go on about why banks, why not banks, why is it better to do an alternative. You got to hear some of those. There's plenty more where that comes from. And if you'd like to learn more about that and getting to understand your best options, how do we combine a multiple amount if we need to? How do we start with unsecured if we need to go to secured financing? How do we do that? Or we start there? We got to start at a basis and improve things. It can take personal and business credit, establishing that business credit, establishing more of it, getting those business credit cards. From there, then securing an unsecured term loan or a line of credit and a combination of the two. Or we do AR factoring, we do heavy equipment, we do real estate, we do inventory. So there are many directions we can go into, but you'll never know unless you consult and work with an expert. And you don't always get that because someone else will try to bait and switch you. They'll try to show you something and then you're like, I didn't get enough that I needed to. So that will be everything from me in this video. If you did get value out of it, please give it a thumbs up. Share it with others who you feel will get value out of it. It can be a complete stranger, a friend, or a family member, but you know at the end of the day, you were able to help them out. And if you haven't subscribed, please subscribe. I was going to forget the word there. And click the bell notification icon so you do not miss any future content on bank loan alternatives and like SBA EIDL updates and everything else you need to know about, because I'm always bringing you the value, jam-packed, and unlike anybody else's business. No disrespect, but there's a lot of content on YouTube, on blogs that just is very surface level. And even if they showed you a little bit, it isn't as in-depth. And some of this you can't just find anywhere else outside of here. So that is all from me. Appreciate you for tuning in. Get that questionnaire filled out and I'll show you those bank loan alternatives and even some online bank loans and what you can and can't do, what is best for you, what isn't best for you, without misleading you. And I don't, for the record, I don't sell. I'm not like that. It's not my background. I went to school for university community sociology first, then I wanted to get into chemical engineering, and then I went into finally business administration, which is what I found it better at. And in depth, I went into it deeper. I like the sciences. Chemistry was my favorite class. Played Division I soccer for a little bit. I worked in different fields: construction, manufacturing, warehousing in my younger 20s. I did a logistics financial role, one of my last 9 to 5s, and then I went into the whole let's start a digital marketing agency, figuring out a way to make a passive income. And that's a story for another time. I'll try to leave you my story down below so you can learn more. But I get your position. I know how difficult it can be out there. So that is everything from me. I appreciate you, and I will talk to you soon. Bye.